to the charts with Big Boss Crypto, bring you another day trading analysis. For those of you who watched my video from 2 days ago, I warned you that we were in our third and final wave up and that the possible M formation was about to form in the 20.3k area. We ripped through it and went all the way up to 20.5k almost, and that is where we formed our double top formation. What's next to expect? Well, let's find out. First and foremost, I want to warn you that we're not through the woods yet. The M formation is about to form and has not yet been formed. To validate this, we have to cross below the 19.7k area. But it looks like we are about to do it. We had some news coming out today. It was the unemployment claims, which came in at 219k, which was higher than expected, which means more people unemployed than they forecasted. And we are still about 200k, which means that the Fed might be hawkish for some time in the future. It has to come down even lower in order to the Fed to pivot and start printing money again. Okay, so we have to keep that in mind. Also, Bitcoin has been moving nicely to the upside. And from my last video, I gave you this target, which was from 19.6 to 19.8k. And this touched it. And we have to reduce our target here, which is the volume candle here. Use the PVSRA tool, it's great. Okay, so that's the first target. If we cross below 19.7 and go down to 19.6, that is where we might form a retrace up, and we might be forming something like this, and then the next target is at the 19.3k area possibly. Let's see if that has confluence in the liquidation map. I'm going to kingfisher.io, free to use it, it's a great tool. Okay, so let's look at the liquidation map and zoom in a bit, because we are day trading, we're not looking at the long term. And we can see that we have still some liquidation points all the way down to, let's say, 19.1k, and it looks like it's heavily tilted to the downside. If you look at the liquidation map, there's more money to the downside than it is to the upside. And we're moving nicely to the upside, catching some retail traders that went long because they saw the upward move, which, yeah, the market maker did that intentionally to reverse price down. So that is to expect from the market maker. He always uses this structure. And I'm gonna repeat it to you. W bottom, first leg up, first retrace, second leg up, and then the M formation before reversing price. And that is where we are currently. We are in the M formation. And the pattern will continue like this with the retrace, second leg down, retrace, and then the pattern repeats all over again. Let's take a look at Chainlink then, our favorite coin. Last time I said to you that we were projecting nicely to the upside and we're going to the $8 area all the way up to $8.2, because that is where we had the last imbalance in the chart and the last volume candle in this area. And it touched it, and that is where I said take some profits in this zone, because that is where the local top will form. And it looks like it did. But it didn't catch all the volume inside this area because Bitcoin went to the downside. And that is to expect for Chainlink as well. So we could see us forming lower candles in the near term. And let's take a look at the volume candles on the 1 hour time frame, which is, we have one here. A possible short area for everyone trading. This volume candle has been recovered. This one has been as well. Okay, and we also have, no, we don't have anything here. Okay, so it's been recovered. So here's your targets. If Bitcoin continues to the downside, which we expect Chainlink going to $7.4 to $7.32 in the next leg down. Or if Bitcoin reverses, there's still some liquidity to the upside at the 8.2 area. In conclusion then, the double top is starting to get informed, and it's a signal that the roller coaster to the downside will continue, and we might form lower lows in the current weeks ahead. But as a day trader, you want to see that the double top has been formed on the 1 hour time frame, and that we can expect moves down to 19.6k firstly, and then all the way down to 19.2k, because that's where we have lots of liquidation points. 19.4k is the minimum target for the market maker to take, and you might want to be looking at shorts when the double top is confirmed. None of this is financial advice. All of this is for educational purposes only. You know that by now, but I still have to repeat it. You have to make your own decisions when day trading. And third and final point is that the Shemitah crash window is still valid. We're in it from the October 5th to November 8th. I'll remind you of this because that is where the possible big downwards move in the Nasdaq, the S&P 500, and also in the crypto market is. Keep that in mind when trading, and you might want to be careful with placing some high leverage longs. Okay, so if you liked the video, please like and subscribe. Otherwise, we see each other soon. Bye.